Bloomberg Audio Studios. Podcasts, radio, news.
We head back to earnings with DraftKings out with their results, cutting its revenue forecast for the full year. The company also out, though, with news that Disney signed a new multi-year deal to make the sports betting company the official betting site and odds provider for the ESPN Sports Network. Let's bring in DraftKings CEO Jason Robins. It's an interesting partnership, and I think that's where we should start. How much does this move the needle for you? You know, we've talked in the past on this program, Jason, with you about the integration of the live sports event and the broadcast with the betting activity. Your big picture goal with this deal?
Well, first of all, ESPN is a, iconic brand. It's, by far the biggest name in sports in the United States, and they have an incredible portfolio, an unmatched portfolio of sports content, influencers, talent. So it's really, for us, just the greatest partner you can have when you're in the space we're in. And Jimmy Pitaro, who runs it, really understands and I think values the sports betting space and understands that the customer overlap is high, and it's important that they engage their customers by being partnered with somebody like DraftKings. So really excited to embark on it. We've been partners with them many times in the past, so it's familiar territory. We know all the people there, and we're looking forward to working together. And you add that to our deals with NBC Universal and Amazon and others, we have an unmatched, I think, presence across the sports landscape over the next several years.
Prediction markets. Wednesday night, we were with Robin Hood at their in-person earnings call. That was wacky. Don't know if you consider that. But the month of October, massive volumes for them. You're being super thoughtful about predictions. I understand that, and you have a clear strategy. My question has always been how much a growth in a nascent predictions market cannibalizes other offerings that you have.
I think very little. If you look at the UK, for example, exchange-based betting is about 5% of the total pie. So, that's probably about right. And I think a lot of it is largely incremental because there are market makers and others that are not present on traditional sports books that generate a lot of the volume. So I think it's very much an incremental opportunity for us, and that's why we're so excited about it. We acquired Railbird, and we're also looking to, enter the market sometime in the next couple months.
What's interesting, Jason, is investors, analysts out there called out on the actual earnings script, talking about how marketing expenses, higher sales expenses, did eat into the results. And they call them also some ugly outcomes when it comes to the sports games. For that, you can't control. But what about the expenses you're going to have on the predictions markets?
Well, we do plan to make some investment there. We mentioned this on the call that we're going to be more, I think, conservative in terms of the paybacks we're looking for, just given how nascent a space it is and the fact that, it's unclear kind of how this will all play out. But we are going to make some investment there. First, of course, in getting a product developed and making sure that that's, the best in class. You can't win. And we've always said this product is the most important thing. You can't win if you don't have a great product. And then, assuming that the numbers check out, we'll spend marketing accordingly. We're going to be very data-driven like we always are and everything. We'll test into it. But we did want to make sure as we guided that we were thoughtful about giving the team some space to be able to accelerate spend if the numbers look good.
And therefore, the guide did pull back rather than uplift going forward, Jason. But you say it's conservative. You talk about an incremental opportunity from predictions. And I'm really interested as to how you make sure this doesn't cannibalize what you already have out there. You've talked a lot about how this might actually make more states accessible to sports betting, because at the moment you can get 50 states with this predictions market, but you've got 25 at the moment for your offering, and you're about to have, and you also have DC, and then you're adding Missouri.
Yeah, I think you're exactly right that this will hopefully lead more states to decide that they might as well legalize sports betting. I think predictions are a powerful talking point for that because, it's same as the illegal market, same as anything, but in this case it's regulated. But the bottom line is it's activity that's already happening in the state at some level that they are not directly benefiting from and regulating. So I do think that'll motivate some states. But for us, really, the cannibalization thing isn't a huge concern. We haven't seen that happen, not just here, but as I mentioned, overseas, where there's long established, it's not a brand new thing like it is here. There's been predictions and sports exchanges around for decades in the UK, for example. So we feel like there's pretty good data out there to show that head-to-head, the traditional sports betting product is a much far superior product for customers.
Jason, you said that this is the most bullish you've ever felt about the company's future. What are the underlying trends, data points, behaviors of your customers that give you that conviction? And why do you have it now that you didn't have previously?
Well, I think if you take a step back, it really starts with the progress that we've made over the last few years and the position we put ourselves in. Remember, 2 years ago, we weren't even profitable. 3 years ago, we had nearly $1 billion adjusted EBITDA loss. At that point, we were getting killed in the market because people thought we were going to run out of money and go out of business. We really buckled down. We grew revenues. We managed costs. And, just a few years later, we've had over $1.5 billion swing. So I think that shows that we are in a great position. But also, more importantly, now we're in a position to play offense. We are profitable. We have scale. We have the best product in the market. We have the absolute best partnerships and presence across the media landscape. We're about to launch sports predictions, which I believe represents a huge incremental opportunity for us. So a lot of really exciting things going on. And the only real negative on the quarter was the sport outcomes. I think all the hysteria over predictions is kind of nonsense. But the really only negative sport outcomes, but that's a temporary thing. That's not something that has anything to do with the fundamentals of the business.
DraftKings CEO Jason Robins, thank you very much.